Chris Gaffney, the Japanese yen has weakened from about 100 to 106 since Prime Minister Shinzo Abe got his vote of confidence last week, and he intends to offer more stimulus to the Japanese economy. So where do you think the Japanese yen is headed from here? Can he weaken it further?
I do think it's going to end up weaker at year end than it is right now, mainly because the Japanese economic fundamentals just don't even support the current level. It may see some volatility between then and now with safe haven flows. I mean, we've got a lot of uncertainty left in this market with the European Union and also the political situation here. So you could see some more safe haven bumps along the way. But in the end, I think it will end up weaker than it is right now.
All right, and what's your prognostication for the Indian rupee? Because India's been a hot country here in the U.S. this year. We saw Prime Minister Modi come speak to our Congress. We saw Tim Cook go over to India and try and sell Apple products. But the rupee has been kind of weak. So what's going to happen with the rupee? Yeah,
at EverBank, we like the rupee. We think that, well, as you said, Modi is basically a rock star here in the U.S. And we see a lot of good things for the Indian economy going forward. It's going to grow faster than the Chinese economy. Their population growth is a little faster. They're an oil importer, so the low oil prices and energy prices should help their economy. And they carry a positive interest rate spread to most of the rest of the world. So, you know, right now with investors searching for yield, I think India is an excellent place to find that yield right now.
And you're bullish on the Brazilian real. This is interesting to me because Brazil, it seems like, is falling apart. You have the Zika virus, you have problems in the government with Dilma Rousseff, you have an Olympics where they're not really selling that many tickets. So why get into the currency right now?
Well, again, mainly it's all about yield. Just like India, you know, you've got investors searching for that yield differential. And also, we like to look at currencies and investments that are beaten up. And I think the Brazilian economy is, you know, how much worse can it get as far as the story there? As you said, we've got impeachment, but we'll have new government coming in, a positive interest rate differential, and commodities upsurge that we've seen towards the first half of this year. If that continues, that's going to support the real going forward.
Well, speaking of commodities, as well as the oldest currency in the world, gold is up around 25% year to date. Clearly, there's a lot of central bank weakening. There's a lot of money flowing into the system. A lot of dovish central bankers out there. What does this mean for gold going forward? Can it go higher?
Well, I think the precious metals in general are gonna move higher from here. I think there's an ability to continue the rally that we've seen. And mainly because, well, there's really two or three different reasons. First of all, as you suggest, interest rates are at historic lows. So the opportunity cost of owning the metal right now is cheap. It's as cheap as we've seen. Secondly, metals are an uncertainty hedge. So we've got a lot of uncertainty going forward. The political situation here, the elections, we've got Brexit and the EU overseas, and also the whole migration crisis. We've got a lot of chaos actually in the financial markets, and therefore I think you'll see some safe haven flows into the precious metals also. And finally, it's just a great diversifier. I mean, it's a good diversification tool. You know, callers into the EverBank World Markets desk like the physical metal. They like the safety and the insurance of holding on to that physical metal. And I think you'll see demand increase on retail side here, and also maybe in India and China where we have that growing middle class. And you know, they are more accustomed to investing into the precious metals as a storage of wealth. So as they expand, we think the precious metals will move higher.
And if they can't afford gold, they can always buy silver. Although silver's getting pricier, it's up around 40% year to date. So can this one move further, or is it kind of stretch its band with gold?
Well, that gold-silver ratio we saw at the beginning of the year was really in favor of silver. And silver certainly had, as I put it, some catching up to do. It has caught up somewhat, but it's still got some more room. And I think there's an industrial demand, of course, for silver, in addition to just the investment demand. And as the global economy starts to edge higher, especially, you know, silver's used in the production of solar panels, so alternative energy. I think the demand side will increase. We've seen the production side slow because it's actually produced as an off product of other things that are mined. So I think the demand will increase, production has slowed, and that's good for the price.
All right, well, thanks a lot, Chris.
Thank you.
And thank you for watching The Street.